Kalu, we're looking at reinforcing fiscal reform initiative and investment flows. We need investments in the country. Leaning on your experience and expertise as a financial analyst, how do you see the federal government tax reforms fit in with the windfall tax? And how will it affect investment and households, particularly in the financial services sector? What should investors and households be doing at this time? We yield the floor to you for 6 minutes for your first response.
Thank you so much for the invite. Glad to be here. Thank you to the fellow panelists. Thank you so much. Let's get right to it. We have a committee headed by Mr. Taiwo. Essentially, what's going on is that the government wants to streamline, make taxes simple, right? That's the simple way to put it. They want to make taxes simple, make collections simple, and also to increase the tax revenues that the federal government of Nigeria earns. The problem is it's taking just too long to get the committee to bring out a proposal to Nigerians. Hence, in this vacuum, we see lots of press releases. There's going to be a 10% hike in VAT. There's going to be less taxes, but we're not yet sure what is going to come out of that committee. So it's difficult to then say if we support it or how that's going to pan out into this windfall taxes. So the first thing is that speed, is of the essence when you're bringing out a tax policy for a country like Nigeria going through change. But let's briefly touch on the windfall taxes. I think the key word there is optics. Optics. This is like a PTF, a petroleum trust fund kind of situation, where we have profits that are levied and are going to then be used or spent by the government to provide services for the Nigerian population. Like everyone has said, Nigerians simply do not trust the federal government of Nigeria and the states to spend this levy. And I think that's basically why you see a bit of back and forth. It's going to be about nearly 4 trillion that's going to be raised from this levy. No one, you would ask in Nigeria, would trust that if you give these funds to the states or to the federal government, that it will get to the guy on the street to cushion the effect of the revaluation of the Naira. It's just that's the problem. No one trusts the government to do what they say they're going to do with this. If they had come out with this windfall tax and said it's going to go to a fund, and this fund may perhaps go to SMEs, or the banks can keep the funds, the money, but create a special a small and medium-scale enterprises fund, which would lend to only SMEs that get less than 5 million in revenues, and that would be a 5-year term. Something like a subsidy on loans, but the banks would disperse it. That might have give it a bit of buy-in, because now the banks will disperse those funds, but it's going to be separated from their usual deposits, but it's still going to be in the bank's balance sheet. So you're strengthening the banks, you are increasing lending, and you're bringing this PPP type format into the whole idea of the levy. So there'll be a bit of a buy-in with the private sector, and of course with the government, and of course people can track and hold its banks to account. So on that note, let's just move on again to how it ties in to the general capital raising. So let me speak on behalf of the investors out there. The CBN has asked the banks to raise funds through capital raising, and the banks have all responded. We see public offers, rights issues all around now. Then suddenly you bring out the windfall tax. So as an investor, what am I looking at? I want to buy this bank shares, but I'm hearing the bank is going to be taxed 70%. I'm not sure what that means, but the bank is going to be taxed 70%. So what comes to me as an investor? If I put in a Naira there, does it mean my returns, my dividends are going to be taxed? It's not clear. The government has not explained what the windfall tax or windfall levy is and how it's going to affect my investments in the banking sector. So you've seen it in the prices. The share prices of all those banks came down. And these banks are raising capital from local and from foreign investors. So it's like a own goal where you're trying to raise. Remember, the CBN has told the banks to ring fence these profits. Don't put it as part of your dividends. So now you tell the bank that profit is going to be taxed 70%. So what's the signal you're sending out to the investors? That the Nigerian government can retroactively go after your profit if you make a return on our bad policies. It's not by luck that the banks made a profit. They took positions in treasury, which is their core functions. Banks trade on currencies. If you make a bad policy, banks will make money off that, as in other institutions that are not banks. So you can actually go after our profit to apply the best of your policy. So it's a bad signal for investors globally that you should stay off the capital market for now until the windfall levy or tax takes place then you can see what's happening. So it would affect the banks raising capital, and it will affect the goal of having this $1 trillion economy. So in terms of speed, in terms of optics, in terms of general plan to say, let's use the windfall tax to boost capital base of banks and also boost the consumption of Nigerians, we haven't done that. Nigerians are really, really suffering, and they need to get clear guidelines. The government seems focused on IGR, raising funds, and not basically deploying the funds. Till now, we don't have any CNG buses out there. Till today, as we speak, we don't have them yet. So how will this 3 trillion, if it is levied or taxed, going to affect the cost of transportation today? I think that's the problem. The government have not shown competence in managing public funds. So it's very, very hard to then say, we're going to trust them with 3 trillion. I like it. I think it's good to distribute income. The banks have made too much money, bring some of it down and distribute it. But how, what speed, who is managing that whole process? These are the questions that the federal government is going to have to deal with.
You raised the issue around investors signaling what they think at this time. And I just want to gain from you. You've heard what Mr. Johnson Chukwu has said about the gains and pains and losses. How should investors in the banking sector consider this windfall tax? I know you said it's going to be challenging for them. They need clarity, but I want to get your perspective on this.
Yeah, thanks again. So the market has already spoken. The market has said because of the uncertainty, the prices came down. So if you look at the banking sector, the prices have come down because investors are asking questions and they're not getting answers. And this is in line with the capital raise. It's a capital raise and there's uncertainty. So you see a bit of the retail price on the floor of the exchange is now at par with the public offer. Usually the public offers as a discount, but now sometimes see them at par or just a few nairas different. So you can see the market react already to the news, and it's just in the banking sector. So it's a pain to investors just because we're not clear on what's going on. I mean, on this panel here, we understand what's happening, but to the average Nigerian investor, it's not very, very clear what the windfall tax or levy is. We hear the trillions, but we don't know what really that means to us. And that's where you see the prices then react. So it's a pain. You know, if you don't get clarity, it's a pain. Now then move over to retail investors feel, and to what Mr. Chukwu has said. Corporate Nigeria is also going to feel the pinch, right? Lots of negative capital out there, and the funds are leaving the sector. So we're taking these funds out of the sector. If you go back to the point I made, if we allow the banks to keep these funds as part of their capital, right, but to ring-fence the funds, put in a special, pool or fund or whatsoever, and then if the banks are able to make, should we say, reports on this, you can appoint independent directors to that specific fund, and you target SMEs or you target consumer loans so that people can see $1 billion went here, $1 billion went there. That money is still in the system. What's the purpose of taxes? For the people, so why take it out of the system? Which means the government looking at it as a revenue grab. And it goes back to the optics and the way government is operated. Take your mind back to MTN. We fine them, yes, but we fine them huge fines. Same with this one, 70% as well. So the narrative is that the government is looking for funds wherever it can find funds, and this provides the government a natural excuse to go after the profits of one of the largest, you should say, contributors to corporate profit in Nigeria. If you look at back now to the investor, what should the investor do? Number one, number two, if you look at the returns, the dividend yield in Nigeria, the largest players are going to be the banks. The highest paying dividend yield company in Nigeria, I believe, is UBA, banking, next is Access, banking, before we get to real estate. So you are still in a good place if you still invest in that sector, irrespective of the noise. I mean, in terms of real returns, the capital market, i.e. the stock market, has given you nearly real rates of return in Nigeria today when you compare to inflation. So still being in that sector is still a good thing if you want to keep your money for longer term and you can absorb the risk. So this is noise, and I think the banks, if you look at their Q2, their half year and Q2 returns, I'm still seeing billions posted. I've seen 2 big banks come out after this windfall tax, posting billions in profit after tax. So I hope there won't be a levy on excess profits not created by foreign exchange valuation, but still it's a good sector to be in. Overall, and just to emphasize the point again, what we're really debating, right, is this trust deficit. I want to go back to it again. That's really what we're debating. And I think the takeaway from this to everyone listening is that the government has got to realize that there's no trust. People do not trust the government to manage money. And it's got to address that trust. This 3 trillion will go to the budget and it's going to go to salaries. And I think we all know it. And that's where it's going to end. There'll be no feedback. There'll be no tracking what has happened to these funds. And then tomorrow they come back and they're going to tag maybe oil companies next time. Maybe they'll go after excess profit on diesel. Maybe if Dangote refinery is now up and running, we might say, okay, let's make tax excess PMS profit that Dangote has made. And the same story is going to go to social investment and we don't see any returns. So there's got to be a bit of a framework and there has to be clarity, which is the whole idea. The economy needs certainty. It needs rules to be followed so that we know how to invest and we know how our government is thinking about spending the commonwealth of Nigerians. Right now, it's just a bit of tax, IGR spend, and the citizens are not seeing anything. Lots of, big numbers thrown around. But if you go back to it, the minimum wage as of today is still the 18. The 70 hasn't come in, but we're doing a windfall tax. So it's not adding up somewhere. And we've got to pass that message back to the government. You've got to move faster, and do things that are seen. It can't be esoteric words. It's got to be seen and held in the hand of the people. And in that way, people have to build back that trust the people had in the government. I yield for now. Thank you.
Chibuka is asking, why is it called levy and not tax? What is the significant difference in this regard?
Well, I had the prof mention that it's because of the incidence that is not assessed on ordinary profit. That's what I heard the prof say, because that's why it was called, like the National Assembly called it a levy. I don't think that the word matters, really, tax or levy, honestly speaking. It's money leaving the system. As an investor, that's cash that should have come to you as dividends. As a corporate Nigeria, that's money leaving the system to go to revenues to the government. We're going to get. So I think that's how the prof described it, that the National Assembly called it a levy based on the incidents and the fact that it's not taxed on an ordinary income that the banks were making. Yeah.
I know you mentioned something about a framework. So it's asking, since we have seen in many events, what happens if there is no further clear format to follow with regards to the impact on investors?
Yeah, I mean, it's that uncertainty like we talked about earlier that has brought the prices of stocks down for banks. So even though you see the banks making profits, even in Q2, their share prices have been muted because initially this uncertainty is what's dragging it down. So I would say keep investing according to your plan. The whole point is to buy a good company at a good price. And a good price is a price that is below earnings. So if you're buying below intrinsic value, overall, the stocks will basically make money for you, which is now the problem, because if you cannot price in the 3.3 trillion, then it's difficult for you to determine intrinsic value. But I would just say overall, stay within your objective. Why are you investing? Buy a good bank at a good price, buy a good stock at a good price is always good advice anywhere you can. And, factor in that risk. It might bring down your dividends a bit, but where else are you going to invest? Like we've heard them say, if the banks are making money, that means that you should get a good dividends at the end of the day. You're an investor. That's basically what you are in the market for, to make money. So focus on where the money is going to. That's what they say. Overall, let me just make this point. Targeting the banks I think is because they're an easy mark. Like someone has asked, how do we target or how do we bring in this fund? Other guys made a lot of profit. I know an insurance company that made unrealized profits on FX as well. Insurance companies are not being targeted as well. Other unlisted companies also made profits. They're not being targeted. So the banks are out there. They are big, they are bold, so it's easy to target them. But let's remember that if we want to get investors in, then these are also what they're going to factor in and write down as the risk of investing in Nigeria. So that's my take.
And I'd like to get to our esteemed panelists to give their closing thoughts, each in 2 minutes, so that we'll wrap up this very interesting conversation. I will begin with Dr. Tilewa Adebajo.
Thanks for the invitation. Learned a lot, and I know folks that have learned also learned a lot. I would just say we need to move with speed, and we need to broaden the conversation in Nigeria. It seems to be that the government, again, is focused on one side of the balance sheet, i.e. raising revenues. the people of Nigeria have really not seen those benefits that were promised. Nigeria has got 4 budgets running right now as we speak, and we've done numerous interventions from when we had subsidy has gone to today, numerous interventions which boil down to sharing rice and giving cash to state governors. It hasn't worked. Inflation is still up. Purchasing power is still down. The minimum wage has still not been paid. The economic plan that was called Accelerated, we just had the board inaugurated a few weeks ago, months after the plan was launched. So there is no speed, there seems to be no direction, and people are not seeing any light at the end of that tunnel. The government has got to move with purpose and with speed. That's just what needs to happen. This conference emphasizes that point. Windfall tax, if you break it down in Nigerian parlors, I see money, I want to take the money. But what are you going to do with that money? We're not sure, we're clear on it. So the government's going to move with speed and address the social issues. Big, broad plans, not this minute, want to do buses, want to share rice. There's a big problem in the country, and if you don't address it now, it might boil over and the economy will basically stagnate. But we're being positive. There's an economy that's still attracting FPIs in. We still have a young population that is English speaking and educated and is still doing good things. So we have a lot of positives there. So let's harp on the positives and hope this economy with good guidance can revert back to the high growth that we had before. On that note, thank you.